Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Activision stock. Activision actually reported earnings earlier this month, so I wanted to take a quick look at what they reported and how things are going for the company. So let's get started. First thing I want to do is let's take a look at how Activision is doing right now. So today is February 19th, 2020, and the stock is sitting at about $64.39. The 52-week high is around the price is currently at $64.43, and the 52-week low is about $40.89. In the past month, the company increased about 6.7%. In the past 3 months, it has returned 19%. Year to date, about 8%. And in the past year, it has returned about 50% returns. The most latest news is the company just had a target price raised to 65 from 50 at Deutsche Bank. And then there was another one that I was looking at. I forget where it was at, but it was raised to $70 by, let's take a look here, by SunTrust. SunTrust gives it a $68 price target from 61. So those are the latest price targets for the company. Before we continue, don't forget to hit that subscribe button. I post content like this all the time, so I hope you guys enjoy it, and make sure to post on the comments below and let me know what companies you guys want me to take a look at. So now, like I mentioned, right, I said this company reported earnings on February 6, 2020, so about 13 days ago. Earnings per share were $1.23, which beat expectations by 4 cents. Revenue was $2.71 billion, which beat expectations by $32 million. That earnings per share is definitely a nice beat of 4 cents for $1.23, but a $30 million to $2.71 million revenue beat is not that huge of a beat. It's pretty much flatline. But these are it's good to see an earnings per share beat, and it's good to see revenue surprise beat. Before we go on, we're going to take a look at the company's the information this company gave to us during their earnings. But I just want to take a look at some of their guidance, at some of the analyst guidance projected for this company. So first, we're going to take a look at annual earnings per share. So this company for 2020 is expected to make $2.46, which gives us a forward PE ratio of 25.92. To me, most companies right now, most tech companies seem to have a PE ratio of 25. That's what I'm seeing. So it's not that overly overpriced, in my opinion. I already have positions in Activision, but if I didn't, I probably would open up a small position at the moment. For 2021, this company has a forward PE ratio of 22.5. This company is expected to make $2.83. 22.51 forward PE ratio, which is what I normally look. I normally look at 2 years ahead when I'm looking at forward PE ratio, and 22.51 looks a lot nicer. And we're seeing that earnings per share growth per year, which is pretty amazing. Next, we want to take a look at revenue. For 2020, this company is expected to make $6.81 billion of revenue. For 2021, this company is expected to see $7.43 billion of revenue. So we still see a huge growth in revenue. That's at least high single digits. I actually have it in a bit. But I think it's impressive to see this company is continuing to increase its revenue. The forward price to sales ratio for 2021, this company has at 6.59, which again, I like this to be a forward price to sales ratio, especially for a company like this, less than 10. So sitting at 6.59 is definitely not a bad thing, in my opinion. And here, let's just take a look. I did a quick graph. In 2018 was actually a pretty good year for Activision. During 2018, this company did $7.5 billion of revenue. Even in 2021, what analysts expect, it's not going to be as high as that. But one of the main reasons it did have that form of revenue back then is Activision had Destiny, which was another game franchise that also collected revenue. Activision no longer has that franchise anymore, so obviously you would expect lower revenues from there. In 2019, this company did 6.4, as we're going to see in today's episode, this company did $6.48 billion in revenue, which unfortunately is a 13% decrease in revenue compared to the same time last year. And if you guys have been following Activision, this is one of the main reasons this company dropped the line. We saw that 52-week low sitting at $40. and this was one of the main reasons that this company dropped so low. We saw that's a huge percent decrease in revenue. But what's estimated for 2020 is 6.81 billion, which would be a 5% growth compared to this year. And then for 2021, it's like we saw again, $7.43 billion, which would be a 9% increase from 2020. So we're starting to see that increase, and 5% is not that great, but that 9% increase expected in 2021 compared to 2020 is pretty good in my mind. So here now we see this revenue growth. All right, so now here we're going to take a look at the slideshow that they provided. And I've actually done Activision episodes many times, so I'm very familiar with the way this company reports earnings. And it's pretty cool that if you start doing this over and over, you start remembering what this company does. One thing that I remember is Activision always undercuts what they really are about to make. So in their guidance, we're going to see that they usually guide pretty weak. And every quarter they beat their expectation. And it's something that really annoys me about Activision, because like I said, they always go under on what they expect to make. And at the end of the quarter, they're like, "Oh yes, congratulations to us. We beat our guidance." And this is something we see all the time. So it's just stuff like this that I enjoy seeing when I keep reviewing a company over and over. So here's the slideshow from Activision. I took the liberty of, like always, to highlighting what I thought were important, so we don't have to go through the whole process. So here we can see net bookings for this company here, right? The first thing I mentioned, right? This company did better than expected Q4 results. And like I said, this kind of is a pet peeve to me, because this company always overshoots. So again, Activision has this plan, this 4-pillar plan in the process of making sure that they continue to develop. The first part of this pillar is to make sure to deliver constant new content releases. The second is to improve live operations. The third is to extend their nice IP and other franchises to a mobile platform, which mobile has been increasing. We're going to take a look at that. And the next one is to add new engagement models to their franchises. So these 4 pillars are 4 pillars that this company has been doing for the past, again, few quarters. These are what it focuses on, and I think it's pretty good that this company only focuses on the strongest platform. It only focuses on Call of Duty, World of Warcraft, and all the Blizzard main things. So I think that's something I truly believe in. If you are strong at something, you shouldn't worry too much about expanding into other things. You have to make sure you keep that strongness and just keep working that out, and make sure that gets better and better, because you can just start building up some form of monopoly like it did with World of Warcraft, right? There has been a lot of massive online player games, but nothing has been able to kick out World of Warcraft. So you can see, just if you keep strengthening what you're strong at, you're just going to become invincible in some form of way. So here they pretty much mention, right, in the major new content releases, they talk about their big Call of Duty game that they released. They released later at the end of this past year. Call of Duty Modern Warfare. They're saying how it was a huge success. In Q4, this company still did better results, double-digit growth compared to its previous Call of Duty Black Ops 4, and they see growth in both PCs and consoles. And then in live operations, they see that they talk about how they have engagement and net bookings increased due to that Call of Duty Modern Warfare, and has grown strongly year to year. Then they also talk about how their other games like Hearthstone and World of Warcraft have seen an increase in engagement. And World of Warcraft Classic, if you guys don't know, Blizzard actually re-released a game that they released about 20 years, 10 years ago, 10, 15 years ago. So they re-released the game. So they're pretty much just resold the game that they made to us players, and it's been doing pretty good. It's been keeping up engagement for the company. Next, we're going to talk about how they're extending their platforms to mobile. And in October, they launched Call of Duty Mobile, which has seen a great numbers. They have gotten a number of awards. It's been like the #1 application downloaded when it first came out, and it continues to be like the top 15 and in the App Store, which I think is pretty cool. that this company is moving to mobile application, because mobile gaming is definitely something that's becoming a huge thing in our world right now. And it gave them confidence, right? By them doing this Call of Duty Mobile, it gave them confidence that they should start focusing on their other franchises and start doing more mobile gaming on them as well. We're gonna see like Diablo mobile gaming. So this is pretty good. They went with one game, and now they're like, hey, yes, this did good. So now let's focus. Let's put some more energy in mobile gaming, and let's develop more games for it. Then they're adding new engagement models to their franchises. In Kings, if you guys don't know, we'll talk about it. Activision owns Candy Crush, which is part of Kings, and which is one of the biggest games downloaded worldwide. And advertising business for this grew 80% year to year compared to same quarter last year. And this year, right now in quarter one, which is where we're at right now, I think one good thing about Activision is they're pretty strong in the esports franchise, and this is something that I'm pretty bullish on. Esports is something that I'm extremely bullish on, and companies like Activision are also understanding this bullishness happening. In quarter one, they re-released their Call of Duty esports league, and they also did their Overwatch league, which they have plenty of games, plenty of big time investors on those companies. And even though, in my opinion, esports is not something that will be able to really translate into the revenue anytime soon, just the awareness of this game is going to continue to bring awareness and brand awareness to Activision. And that's where that's going to help this company shine. When more people know about Activision, when more people know about Blizzard, when more people know about Call of Duty and Overwatch, more people are going to buy their products. They're going to buy more of their merchandise. More of their licensing stuff are going to go up. So that's where I see esports is going to help this. I don't think esports is going to help this as them selling tickets to esport matches or anything like that. No, I think for companies like this, esports is going to be a brand awareness for them. And with that strong brand awareness, it's going to increase the revenue collected because of people knowing the brand. In quarter one, they also announced that they are in partnerships with YouTube to bring, like I said, all these esports. YouTube has the rights to show the Call of Duty League and the Hearthstone League for it. So YouTube is trying, if you guys know, Google is also trying to get into the gaming streaming thing. They are far behind Twitch right now, but they have the money to continue to develop and eventually get there. And having this platform move into YouTube, having Activision's esports move into YouTube, I think is a smart move for both Activision and for YouTube as a whole. So now Activision's monthly active users is 128 million at the moment. And here, the only thing I really want to talk about is you can see this Call of Duty installs exceed 150 million. And it's reaching the top of the download charts in 150 plus countries and regions. And in quarter four, it ended in the top 15 grossing games in the United States App Store. So you can see Call of Duty mobile games, right? You can see if you have kids, if you have cousins, they all are playing Fortnite on their phones. They're playing Mario Kart on their phones. So it's pretty impressive that these big companies know what's happening and they're moving in there at the time. And like I mentioned before, right, the Call of Duty League is happening, which launched with high-profile sponsors and streaming distributions through YouTube. I don't know if any of you guys watch Gary Vaynerchuk, Gary V. He's actually bought a Call of Duty League. I forget what's the actual name, but he's a big-time investor, and you can see he's one of those that are sponsoring a Call of Duty team. Next, we're going to see Blizzard. Blizzard's monthly active users is sitting at 32 million. So it's about, 1/4 of the active users of Blizzard. And here they continue to say that, hey, World of Warcraft is doing a lot much better. It's actually doing twice. World of Warcraft has twice the size as it did in quarter two, ending quarter two. So that's huge growth. And here we have called World of Warcraft Classic, and they're coming out with an expansion in the second half of this year and more content for World of Warcraft Classic. So they're delivering to their customers. They did release an expansion for Hearthstone, which helped that and helped net bookings grow sequentially for the franchise. Then we have Overwatch. Overwatch was released for the Nintendo Switch, which helped this game grow to 50 million players globally since launch. And look, that's pretty impressive. If we take a look at numbers, Call of Duty Mobile was downloaded 150 million times. But look, Overwatch, which has been such a strong game, has only had 50 million players. So you can see that strength in that mobile platform and how quick it is for this company to grow awareness. And in February, the Overwatch League will return with 20 teams. And then Diablo is being developed in mobile with partnerships with NetEase. So NetEase is also another gaming company that's working at the moment. So if you guys want to take a look at another esports company, NetEase is definitely one to take a look at. Next, we're going to take a look at Top Dog, and this is King. Look at King. Monthly active users is 249. It is about double the size of Activision, and it's about 8 times the size of Blizzard. So you can see how strong King is to this platform. And like I said, King has pretty much Candy Crush. That's the biggest game. And Candy Crush, once again, is the top grossing franchise in the United States app stores in Q4 and 2019. This company's Candy Crush is definitely doing pretty good. And we can see King's advertising business grew 80% year to year in Q4 compared to same time last year and exceeded 150 million in 2019. King is actually also trying to invest in new titles, including some content based on Activision's beloved catalog IP. So who knows? In Candy Crush, we might get a Candy Crush World of Warcraft, a Candy Crush Call of Duty, a Candy Crush Overwatch. So that's pretty impressive that this company knows that, hey, Candy Crush already has a lot of people. My 30, 40-year-old mom already is playing Candy Crush. But how do we get these youngins to play? I know how. Let's put some of these main characters from World of Warcraft. Let's play some of these main characters from Call of Duty, and we'll be able to get more players here entering this. So I think that's a pretty smart move for Activision. So here next, we're going to take a look at the net revenue divided by these companies, right? So King is coming in at $503 million. Blizzard is actually coming in pretty clutching at 595, and 595 million sitting at one of the lowest monthly active users, right? This one only has about 32 million active users. So for 595, that's actually pretty impressive. Activision coming in clutch with with $1.4 billion in net revenue. And one of the biggest things, this revenue growth was led by Call of Duty, both in game revenues and consoles and PC, and the addition of Call of Duty Mobile. So we can see, right, that mobile gaming and just Call of Duty for console and PC is doing pretty good. Operating margins for this company is 49% for Activision. Blizzard provides a little bit less at 44%, and King provides the lowest at 39%. And they do say that the operating margins for Activision, the Call of Duty section, is a little bit lower because they spent a lot more money than on advertising for Call of Duty Mobile. But again, I think you need to spend money to make money, and this company knows that. So eventually we're going to start seeing that operating margin increase because they're going to spend less money on marketing. Operating margins in Blizzard increased due to just a mix of lower cost of expense. And they did say that operating margins for King increased a very little, driven by the huge margins collected from advertising. All right, so next let's take a look. Like I mentioned, 2018 was a really good year for Activision compared to 2019. We can see, right, $7.5 billion in revenue compared to right now $6.5 billion. So this company did make a lot less revenue. But when we take a look at earnings per share, it wasn't that big of a difference. Earnings per share for 2018 was $2.40. For 2019 was $1.95. Operating margins are a little bit lower as a whole. In 2019, operating margins were 25%. In 2018, it was 27%. Operating cash flow, this company is maintaining a lot more of its operating cash flow. Last year was $1.79 billion. Right now it's $1.83 billion. So we do see a small increase in operating cash flow, even though this company has less net revenue. And free cash flow is also increasing. So this company knows how to maintain its cash flow coming in, and it's able to maintain a positive free cash flow. One thing I do see is Activision does not do much of buying back shares. right now, this year and last year is sitting at about the same 771 million total shares outstanding. All right, next let's take a quick look at the company's balance sheet. We're gonna take a more look on them later on in the episode, but this is just a quick show on this. Cash and cash equivalents last year was $4.4 billion. Right now it's about 5.9. So we see an increase of about $1.5 billion in cash and cash equivalents. Gross debt, this company, this is something I always see. This company, it has senior notes due so far ahead that this company doesn't really worry about paying it anytime soon. And we can see its gross debt continues to be 2.7. Net cash, this company now holds a lot more cash than it did in 2018. So it's in a lot better position. Even though 2018 revenue-wise was really good for Activision, this company does seem to have a way better balance sheet now. And for 2020, they are increasing their dividends by 11 cents to 41 cents per share. So next, let's take a look at what this company gives for guidance. This company says for 2020, they're going to give somewhere between $6.45 billion of revenue and earnings per share of $1.85. Like I said, this company always undershoots, so they're going to beat this. They're not definitely, right? You should never say definitely. But out of all the times I have seen Activision, this is what they do. If we take a look at the analysts, what they project, right, they expect $6.8 billion, so $400 million more, and they expect earnings per share of $2.46, a lot higher than this. So like I said, this if you guys take a look, this company always undershoots what they expect. All right, so next let's take a look at the second information that this company provided for the financial results. All right, so let's take a look first at net revenues, and let's see, this company's main revenue is divided into two different parts. So the first part of net revenue is product sales, so this is just selling its games and stuff. The second is subscription, licensings, and other revenues. So for this year of 2019, this company made about $6.5 billion of revenue. $4.5 billion of that 6.5 came from subscription, licensings, and other revenues. $2 billion came from products. Next, if we take a look at this company, so we can see, right, subscription is a very huge portion of this company's total revenue compared to product sales. Next, I want to see some of the expenses this company is using. And first, we can see product development. This company is spending less, about $100 million less in product development compared to 2018. $100 million less is not a big deal, and we can see, right, this company did have a lot higher revenue last year, but I definitely like to see an increase in product development and sales and marketing, and unfortunately we don't see that here. But it could just be that this company is being smarter in the way it's working, right? So they might have cheaper workers, or they might just do some cost savings that has done that reduction there. But normally I like to see product development and sales marketing increase. And actually, let me just zoom in a little bit so you guys can see. Right now, 300. We can see for the year, this company spent about $100 million less in both product development and sales and marketing. That's pretty much from the income statement that I really want to take a look at. We talked a lot about most of the stuff. Next, I wanted to take a look at the balance sheet. So this is December 2019 compared to December 2018. Like we mentioned, this company has about $1.5 billion more cash and cash equivalents, which is a good thing. We can see that increase in total current assets by $1.1 billion, majorly coming from cash and cash equivalents. We do see a decrease in some other stuff, but it's not that big to talk about. A few things to note is this company does have some deferred income tax. So eventually this company, because of this, I think it might definitely be earnings per share, because it means that this company already paid some of its taxes. So it's not gonna have to for the future. So it's not gonna have to pay more. It might actually even get a refund depending on how much this company pays on taxes. Total assets grew about $2 billion. Remember that about $1 billion come from that current assets, and about the other $1 billion comes from that deferred income tax, which which make up most of that total assets. There has been a little increase in other stuff, but nothing really worth mentioning. Next, if we take a look at liabilities, one of the main company's total current liabilities is deferred revenue. And deferred revenue, for those that don't know, is this company has collected revenue, but it has yet to produce that product. So when does this happen? Usually this happens when, for example, World of Warcraft, which is a subscription game, you pay for a 12-month subscription, but you've only played the game for 1 month. So Blizzard still needs to give you 11 months of play time. So that's why this company has that as deferred revenue. But this eventually ends up going into the income statement and the assets. So this to me is fake revenue, because there's a high chance that this company is gonna provide that service for it. So it's liability, because if this company does not provide the service to the customer, then it has to pay that money back. But it's not definitely. I gotta stop saying that. But this company is gonna for sure is gonna most likely do its needs to the customers. So current liabilities increased a bit by $300 million. Again, not much, not big of an increase to really mention. Long-term debt this company seems to not care about paying its long-term debt. It's pretty similar levels to it. Total liabilities increased by about $500 million, mainly coming from a little increase in everything, in a little bit everywhere, right? And I don't think that's a huge increase. It's something to be worried about. Total liabilities is sitting at $7 billion, when total assets is sitting at about $20 billion. So that's about a nice $13 billion of shareholder equity. So I really like this company's balance sheet. Next, I just wanted to take a look at how I want to see the breakdown a little bit more on this company's revenue. And I have this down here, so 1 second. So this is more to just understand where the revenue is coming from. So remember, we mentioned that this company collected about $6.5 billion of revenue this year. 76% of that revenue comes from digital online channels. So we can see how the digital world is a big thing for gaming. 14% comes from retail channels. So this is going to a big store or going to Amazon to purchase these. That's where 14% of this company's revenue comes from. So you can see, right, it's not a big, it doesn't matter if all stores close down, this company is not going to lose that much on revenue. And other comes at 10%. Other, I checked here, other primarily includes the revenue from the distribution business and the Overwatch League. So this is somewhere, if you are following esports, other right now includes some of the esports revenue, but not much, right? Because it has other things. Eventually, if esports becomes a huge platform for this, we're gonna see it increase. Might see a more distinguished revenue segment there. Next, I want to take a look at how this company does console-wise platform. 30% of the money comes from, again, with that $6.5 billion, 30% comes from consoles, 26% comes from computers, and 34% come from mobile and any handheld. And then the other does that same 10%. And then just by the region, right? Americas make up 51% of this company's total revenue. Europe, Middle East, Africa make up 35%. Asia Pacific make up 14% of this company's total revenue. So you can see this company makes most of its money from Americas. That includes North and South America. All right, next, the last thing I want to take a look at is monthly active users. So here we can study from December 30th, 2018. Each quarter here determines how it's been improving, right? So Activision in 2018 was actually pretty good. It went down. Let's just zoom in a little bit more so you guys can see. It went down from December of last year, 53. March went to 41 million. June, it continued to decrease, but then December of 2019 came and this company was like, bam, hit 128 million due to what? Call of Duty, that Call of Duty game and the Call of Duty mobile game. So you can see that strength in that mobile platform. Blizzard did decrease a bit, but it has maintained its normal levels, right? About 32 to 33 million each quarter, which again, it's pretty good to see that this is a constant rate because, for example, World of Warcraft it's just a constant revenue for this company. King did see a nice decrease. In December 2018 was 268 million compared to now 249 million. So I guess this is the main reason they want to use some of their franchise to reignite the fire in King. But King is still the best, the most money making application in the United States App Store. But here total monthly active users for last year was 356. Right now it's 409. But one of the biggest thing was because of that mobile platform. And if this continues, right, that gives this company confidence to go on and proceed the mobile world. So I think that's all I have for Activision. I'm a pretty big fan of the company. I do think maybe right now for me personally, I probably would open up a small position if I didn't have a position. But there are many things I like about this company. I like the increase of revenue. I like the increase of earnings per share coming up. A forward PE ratio of 22 is not that bad, but it's not the greatest thing. Anything below 20 would definitely be really nice for this company. I like how this company is very involved in the esports world, and I think that's definitely going to help out this company in the long term. One thing I don't like is, like I always say, I hate how this company always undershoots what it's really going to make and then ends up celebrating for beating expectations. Like, come on, man, you know you're gonna beat it. So stop giving us weak numbers. Give us what you really think you're gonna make. The balance sheet is pretty good. The platform, all its franchises are pretty good. And it's pretty cool to see this company's growth in the mobile platform. So I hope you guys did enjoy this episode. Make sure to subscribe, make sure to share, and let me know what you guys think on the comments below. Take care, have a good night, and see you next time.